Today we're going to have our weekly discussion of current market conditions and trade of the day. Look at the key support and resistance, short-term, long-term, and the disclosures are very important. I'm going to talk about portfolio allocation and some of the trade ideas. Please visit optionscreening.com, the link on the screen if you need more time. If you're new to trading stock and options, please visit that link on the screen. And if you need more time to read the disclosures, I encourage you to pause the screen and finish reading the disclosures. All right, let's take a look at current market condition. Look at the 10-day trend. For spiders, 400 is overhead resistance. We're trading at 400. 398 is a support. So we're trading in a very narrow range. Vector did turn positive, which is, I agree with the model. I think as long as 200-day moving average holds, which is around 392, 394 level, the path of least resistance is to the upside. We did have the Powell's speech. First day he was more hawkish, second day he was more, less hawkish. But in reality, nothing has changed, right? We're data dependent. It does look like instead of a target rate of 5 to 5.5, potentially it'll be 5.5 and 6. So higher for longer. That one takeaway. Rates did jump. 2-year yield did jump to be over 5%, and historically high rate of inversion between 2 and 10-year yield. Looking at the 6 months, also nothing has changed. Model is neutral for the March. I would not be surprised if the market reaches 421. A lot of it will depend on unemployment data. Currently market is up, not a lot, on worse than expected unemployment numbers, right? The tick up in claims, initial claims, and market took it as a positive sign, right? So now any bad news would be good news for the market when it comes to macroeconomic data. When it comes to CPI, obviously we do want tick down in terms of CPI data, which will be announced next week on Tuesday. As of right now, Spiders is staying above 50-day moving average. I think that's bullish for the market. It's a big win for the bulls. And looking at, let's switch to interest rates and the dollar. Drop, 2-year yield drop below 5, which is positive. 10-year retested 390. 390 is the key level. Several times I would watch this level. I think for the market to continue going higher, we do need to break through this December high on a 10-year yield. It's a key data point. I think once we do, the market will continue to rally, potentially reaching 420 level. 420, 430 on the downside. I would watch the 52-week 200-day moving average, which is around 392, and then I would watch the December low, which is around 380. Now, again, I am slightly bullish in terms of my portfolio allocation. I have at this point a little bit more bullish positions than bearish, and I divided them short-dated options. I'm bullish, so I am bullish in March, maybe even second week of April contracts, but bearish into June and September position. So in terms of my allocation, I have kind of a calendar spread where bullish position on front months and bearish back months, and I do have few stock positions. I want to make sure that you do realize that I trade stock and options. That's been a frequent question. All right, in terms of trading, let's see. CrowdStrike, I did close iron condors selling out of the money puts and calls. That has been around earnings. That has been my favorite trade. CrowdStrike, just closed CrowdStrike, and I would consider buying spiders. So I do have a spiders position also. Continue to add spiders position. I think we will revisit 420 level in the next few weeks. And finally, please join us on YouTube. We're over 1,000 subscribers. Thank you everybody who clicked on subscribe. If you haven't clicked on subscribe, please find Trades Boom, click on subscribe, and join us live or look at the recordings. On Wednesday we have live trading room, and every other day we do have update on market conditions. Thank you very much and have a great day.